The fiscal fantasy is over. America's debt spiral has no exit plan. The US dollar is declining fast. And if you're a real estate investor, you're exposed whether you realize it or not. The 2025 budget tells a clear story. The US government is spending over $1 trillion more than it brings in, and the national debt has passed $36 trillion. This isn't just bad policy, it's financial malpractice, and both parties are responsible. Democrats push massive entitlement programs. Republicans promise tax cuts without spending cuts. The result is a bipartisan agreement to bankrupt the country. In 2024, America's debt-to-GDP ratio hit 124.3%. That puts us in the same league as countries that have already experienced fiscal collapse. And it's getting worse. If current policies continue, we're headed toward 200% debt-to-GDP by 2047. Even more dangerous? Interest on the national debt is now costing us $579 billion per year. That's 14% of all federal spending, just to service past mistakes. None of that money builds bridges, educates kids, or defends the country. It's just interest. So what does this mean for real estate investors? Everything. If your assets are dollar-denominated, and most are, your returns are now exposed to a currency in decline. Historically, real estate has been a hedge against inflation. But in an era of systemic monetary erosion, it's no longer enough. Enter Bitcoin. Bitcoin isn't just speculation anymore. It's becoming a legitimate hedge, a digital store of value with a fixed supply and no central control. It's not subject to political manipulation. It can't be printed. It doesn't rely on the solvency of any one government. For real estate investors, this matters. You're not just investing in buildings, you're investing in the currency those buildings are priced in. If the dollar continues to weaken, a portfolio with no hedge is a portfolio at risk. Family offices, private equity funds, and institutional investors are starting to move quietly. They're allocating a small percentage, just 1 to 5%, into Bitcoin as insurance. Not to replace real estate, but to protect it. Because if the US dollar enters a full-blown credibility crisis, your cap rate won't matter. The value of your returns will already be gone. It's time to stop thinking in terms of just bricks and rents. Think in terms of economic regimes. Think in terms of monetary durability. Hedging with Bitcoin isn't radical anymore. It's responsible. The fiscal fantasy is over, and the next phase has already begun. Read the full breakdown on the Richardson Brief. Link in the description.